Hello, students. Today I'll be teaching you final account sums, but in this there will be admission of partner. Okay, and the partner is admitted during the year. So this is a unique case. You all are aware about final accounts. It has a trading account, P&L account, partner's capital account, and balance sheet, right? So whenever you have final accounts and it has admission, we have to be very careful. We have to see when the partner is admitted. Okay, if the partner is admitted on day 1 of the year or last day of the year, in that case we need not have pre-column and post-column in P&L account. Pre and post-column indicates pre-admission part and post-admission part. But when a partner is admitted during the year, say for example, after 6 months or after 3 months are over or after 9 months, then we have to bifurcate our P&L into 2 parts. That is, profit will be shown by pre-column for the period the partner was admitted, and post-column will show profit after the admission of partner takes place. Okay, so we have to be very careful to decide whether we want pre-post columns or not. Okay, once again I'll repeat: if a new partner is admitted during the year, then we have to have these 2 columns in your P&L account. One is pre-column and second is post-column. That is pre-admission column and post-admission column. Because of this, what we have to do, we have to bifurcate all the expenses into 2 parts. Okay, that is how much portion of expense belongs to pre-admission and how much belongs to post-admission. I hope this is clear. Okay, sometimes they may give you details about trading account also, before admission and post-admission. Okay, if it is given, then we will have to make pre-column and post-column even in trading account. Okay, otherwise it is not required. Okay, straight away, whatever gross profit we will get, we will bifurcate into pre and post column. Is this clear, students? Now let us read some and we'll decide, okay, how many columns are required. Clear? I'll read the sum, please pay attention. Following is the trial balance of partnership of ABC as on 31st December 2013. Okay, so balance sheet as on last day, 31st December 2013 is given to us. Okay. Capital accounts are given. So we'll be posted in capital accounts, credit side. Drawings will go to debit side of capital account. Building, furniture, debtors will go to asset side. Always remember, in balance sheet, we don't have pre-post column. In partners capital also, we don't have pre-post column. Pre-post column is possible only in P&L account. Okay. So building, furniture, debtors will go to balance sheet on asset side. Creditors will go to liability side. Cash, again asset side. Now second half of your trial balance. Bank balance, stock will go to asset side. Rather stock is opening stock, so we'll go in trading account. then purchase trading account, wages trading account, carriage trading account, sales trading account credit side, office admin expenses, P&L account, selling distribution expenses, P&L account. Okay. Now let us read the additional information. On 1st July, B has been admitted who has brought 5,000 for capital for which the entry has been passed. And rupees 12,000, I have made it 12,000 instead of 2,000. So we'll read as 12,000. And 12,000 as share of goodwill for which the entry is yet to be passed. Well, students, I have observed whenever admission entry is there, many students get confused. Okay, so don't worry. I'll show you the easiest way how to record these entries. Okay, it's not at all difficult. I'll show you the best way how to record admission entries regarding capital and goodwill. Okay, I'll cover everything. Then, so the date of admission is 1st July. So we have to count months. Okay, now how many months are there before his admission? So our year end is 31st December. So the first day of the year must be 1st January 2013, isn't it? So Jan, Feb, March, April, May, and June. First 6 months will fall in pre-period, and after 1st July, that is July onwards till December, will fall in post period. So again, remaining 6 months. Okay, this is very important. So we need to have pre and post column. Clear? That is up to June, and here July to December. July to December. I hope this is clear, students. Okay, why we have pre and post column? Because we need to find profit separately for pre-period and post-period, before admission and after admission, because the new partner will not get share in profit before his admission. Are you getting it? Suppose you are in a partnership firm and after 6 months a new partner is admitted. Will you give him profit which was earned before his admission? Definitely not. Okay, so that is the logic or reason why we have pre and post column in P&L. So whatever profit will belong to pre-period, that is before his admission, will be shared by old partners only. Okay, and profit in second column, that is post column, whatever profit you will get will be distributed in all the three parts. That is the reason why we have pre column and post column. Okay, students, so we need to have pre and post column, that is Jan to June and July to December. Okay, we can calculate time ratio for this. Very simple. Can you tell me what will be the time ratio? Because in pre-period we have 6 months and in post also we have 6 months, isn't it? So your ratio is 1:1. Your ratio is 1:1. Okay. So time ratio is 1:1. Okay. So we'll use time ratio to divide all office expenses and depreciation between pre and post column. Clear? Okay. Sometimes we have selling expenses, bad debts. These expenses depend on sales. So we may have to make a sales ratio, but only if details about sales in pre and post column given. Okay. Now let us read the sum. We read the first one, adjustment. Now second, before admission of B, means B is new partner. Okay, be careful. Before admission of B, A and C were sharing profit in the ratio of 4:1. Okay, so whatever profit you will get in pre-column, that is up to June column, you will divide that between A and C and not A and B. Okay, so be careful. Okay, and the ratio you will use is 4:1. After admission, the profit sharing ratio is 3:2:1. Now we'll presume this is in the sequence of A, B, and C. Okay, clear? Okay. Then depreciation at 10% to be provided on building and furniture. We will do that. Less from assets and P&L debit. 10% provision for doubtful debts. Again, less from debtors and P&L debit. Okay. 10% interest on capital to be provided or allowed to partner. This is new for you. Okay, I'll show you very simple entry. Okay. Last stock, closing stock is given. So trading account credit side and assets. Okay. So let us start posting, students. Okay. There are no outstanding or prepaid adjustments. So we can directly start posting. Okay. We'll start with the capitals. So capitals are given to us. Where will post capital? In the capital account. So I'll write buy balance brought down. Base capital is 10,000. Base capital 5,000. Business capital 2,500. Okay. Next, drawing. We record drawings on the debit side. So I'll write two drawings. Amount given as 1,500 and 250. Okay. Next, building. This will go to asset side. So I'll write building amount. Since depreciation is there, I'll put in inner column 7,000 and leave line for depreciation. Then furniture is given, right? Furniture amount is 1,000. Again, I'll provide line for depreciation. Then debtors. Amount of debtor is 12,000. Again, we have to provide RDD on this. So less RDD. Okay. Then creditors. Creditors will be on the liability side. I'll write creditors. Amount of creditors is 14,000. This is very similar to your normal final account sum. Only thing is that we have to divide expenses in P&L account. Okay. Cash. Cash balance is given as 1,000. Bank balance given 11,350. Stock. This will be opening stock. I'll go to trading account. To opening stock 3,000. Okay. Then purchases. So two purchases. 118,000. Then wages. So I'll write two wages. I'll write in outer column only because there is no adjustment. Okay. So wages 1,800. Carriage 600. Then sales will be on the credit side. Buy sales. Amount is 1,30,000. Then office and admin expenses. This will come in P&L. I'll write to office and admin expenses. Okay. Since time ratio is equal, that is 6 months and 6 months. Okay. Before admission and post admission. So we will divide all the P&L expenses in equal proportion, 1:1. So amount is 3,000. So I'll write 1,500 and 1,500. Is it clear, students? Next, selling and distribution expenses. So I'll write 2 selling and distribution expenses. Okay. Since sales of pre and post is not given separately, we presume that sales is equally divided over the 12 months. So we'll take time ratio only. Okay. So amount is 1000. So we'll distribute 500 each period. Okay. Done. So we are done with the posting of trial value. This much will give you at least 6 marks. Okay. When you post all the items of trial balance, you will get minimum 6 marks. So 6 to 7 marks you can earn here. Clear, students? Okay. Now I'll read the adjustments. On 1st July, B has been admitted who has got 5,000 for capital for which the entry has been passed. Yeah, we saw that in capital 5,000 is already recorded. So the entry is already made. Okay. So need not make entry for this 5,000. Okay. Then now suppose they said that even this was not recorded, then in trial balance this figure would not have been there. Okay. In that case, what you would have done, you would have written here by cash, and in B's column you will write 5,000. Suppose it was given that it is also not recorded, then what you will do, in capital account you will write by cash and write the amount 5,000. Is this clear? And second effect will be when cash is brought in, your cash will include this 1,000. So instead of 1,000, it will become 6,000. 5,000 plus 1,000, likewise. Is this clear, students? Okay. Now in this sum, they told that 5,000 is already recorded. Means they have already added 5,000 to capital and 5,000 to bank or cash. Okay. Next. And 12,000 as share of goodwill for which entry is yet to be passed. Okay. So new partner has brought in his share of goodwill. How much it is? 12,000. Okay. So goodwill raised is 12,000. Okay. Who has brought in? The new partner. Okay. So how to record this? Well, when he brings in cash for goodwill, the entry is cash account debit. Well, I told you that I'll show you the simplest. Okay. So I'll not show you the details because you already are confused with that goodwill part. I'll show you the simplest way to record goodwill. Okay. Okay. So what you do whenever they say raise goodwill, just write goodwill on the credit side, buy goodwill. Okay. And this amount 12,000 will be divided between A and C. Okay. You give share to A and C in their profit sharing ratio. So what is the profit sharing ratio of A and C? It is 4:1. It is 4:1. Okay. It means 4 by 5, 4 plus 1, 5. So it is 4 by 5 and 1 by 5. Clear? 1 by 5. This is how you have to distribute. Okay. So what is the amount? 12,000. So how much A will get? A will get 12,000 into 4 divided by 5. Okay. Let us solve it. See how much is the value. 12,000 into 4 divided by 5. Okay. 9,600. Same way we will calculate for B also. How much B will get? He will get 12,000 into his share is 1 out of 5. Okay. So if we calculate 12,000 into 1 divided by 5, 2,400. Okay. So I have shown you simplest way. When a new partner brings in goodwill, it is to be given to the old partners for their hard work over the years they have done. Clear? So A will get 9,600 and C will get 2,400. Is this clear? And in books of accounts, you will have a new asset like goodwill. Okay. I'm just showing you goodwill. Okay. Pay attention. How much total worth is 12,000. Okay. So if in the sum you are given that Goodwill, for Goodwill entry was not passed. So this is the entry which you have to pass. What you will do with that 12,000, first distribute that among the old partners in their profit sharing ratio, which was 4:1. Okay, so I distributed between A and C as 9,600 and 2,400. And this 12,000 is your asset. Okay, so will be recorded on the asset side as Goodwill 12,000. Okay, but now if the question has adjustment that write off this Goodwill, don't keep this Goodwill, then what you will do? See, I have added one adjustment. Okay, seventh adjustment that Goodwill is to be written off immediately after admission. Suppose this line is there, okay, then it will have 1 mark. This entry will have 1 mark. Okay, so they don't want to keep Goodwill in balance sheet. What you do? You remove it from balance sheet. Okay, what you can do is I'll show you how to do it. Okay, you write this 12,000 inside. Okay, then you write less written off. What you write? Less written off. Okay, means like depreciation 12,000, and the amount will become 0. Clear? And this 12,000 don't write off to P&L like depreciation. Instead, you give it or charge it in your partner's capital account. You write to Goodwill. Okay, that's it. And it is to be divided amongst all the 3 partners because now even B is a partner. Okay, so while writing off, you have to write off amongst all the 3 partners, not just A and C. You have to write off amongst all the 3 partners. And what is their share now? 3:2:1, isn't it? So I'll just show you here how to write off and how to calculate the value. Okay. This is very important entry. This entry itself will have 2 marks. Okay. One for recording and one for writing. Okay. So now Goodwill written off entry. Okay. Now we have to write off to the capital accounts of all the 3 partners. Okay. Now new ratio is given to you in the sum in B adjustment 3:2:1. Okay. So A will get how many shares? 3 plus 2, 5 plus 1, 6. First add all the shares. So A will get 3/6 shares. Okay. How much B will get? 2/6 shares. And how much C will get? 1/6 shares. Okay. So now let us calculate the amount. It will be 12,000 into 3/6. Okay. So when we write off Goodwill, it will be recorded on the debit side of partner's capital account. Okay. What is the A share? 6,000. Clear? Then we calculate for B. For B, again take 12,000 into B share is 2/6. Okay. So 4,000. So obviously remaining share 2,000 will be for C. So record that 4,000 in B column and this column 2,000. Is this clear? This entry will have at least 2-3 marks. Okay. When they say Goodwill is to be recorded, write on the credit side by Goodwill and divide the given amount between the old partners in their old ratio. And if the question says write off the Goodwill immediately, then just reverse the entry on the debit side. Okay, to Goodwill. Now divide the same 12,000 amongst the 3 partners. Okay, I have shown you how to do it in balance sheet. Balance sheet part, even if you don't do, it's okay. You can just show entry only in partners capital account. If they say raised, then divide between A and C and give second effect in asset side like 12,000. Okay, if they say write off, then remove from balance sheet 0 and debit it to all the 3 partners in their PS. I hope this is clear. This is very important adjustment. Okay. It will be at least for 2-3 marks. This one single adjustment. Okay. Now let us move ahead. This one is done. Next adjustment is depreciate building and furniture 10%. So less from asset. 10% means 10 less, so 700. So it will be 6,300 in outer furniture. Clear? Same way on furniture also we have to charge 10% depreciating, which is 100. So 900 will be the outer furniture. Clear? Now we go to P&L. We'll write to depreciation. Okay, below that, I'll write on building. Now, what is the total amount? 700. Okay. So divide equally. Since 661s are there, so 350 each in pre and post column. Okay. Understood now? I pre post are done because a new partner is admitted during the year. Okay. So we have to divide all the expenses in P&L in time ratio. Okay. And 100 rupees depreciation of furniture, so will be charged 50 each. Is this clear, students? I hope this is clear. Let's move ahead. Now it says provide 10% for RDD. So on debtors, 10% will be 1200. 1200. Okay. I'll write 2 RDD. Again, it will be 600 each. Clear? Next, 10% interest on capital is to be allowed to all the partners. Okay. See, below capital, I have left one line. It was for this entry. Okay. So here, by interest on capital. Who is getting the interest? Partners. So they will be credited. How much interest? 10%. Okay. Always give interest on opening balance of capital account. Okay. So he will get how much? On 10,000, he'll get 10% for a full year. That is 1,000. Clear? What about B? B has entered into partnership firm after 6 months. So he will get 10% only for 6 months. So it will be like 5,000. Okay. Into 10%. And 0.10, 0.10, that is 10% into only 6 by 12 into 6 divided by 12 because 6 months is there only for 6 months. Okay. So 250. See, full annual interest would have been 510%, but he'll get only for 6 months. So only 250. Now on his capital, he is from the beginning. So he'll get 250 for entire year. I hope this is clear, students. Okay. So now second effect of this interest will be recorded in P&L. Okay, you will write to interest on capital. Okay. Now write partners name A, B, and C. Okay, this is very important. Just pay attention. How much interest A got? 1,000. So 500 must belong to pre-period and 500 remaining to post-period. What about B? His interest is 250, but he was not there in pre. So in pre, 0, entire 250 in post. This is important. Okay. C, he got interest of 250, but he was there in pre as well as post. So we'll divide that 250 in pre and post column. Have you understood this, student? This was very important adjustment. Okay. Now, last adjustment, stock on 31st December is rupees 3,400. 3,400. So closing stock, 1 in trading fund by closing stock 3,400, and on asset side, closing stock 3,400. That's we are done with the all the trial balance item as well as adjustments. Okay. Now we can close the account. Okay. So let us start with the trading account. Let me check the total of trading account. 133,400. Okay. 133,400. So 133,400 on the debits. Okay. Now I see total of debit side items. It is 123,400. Okay. 123,400. Okay. So GP will be total minus 123,400, right? So difference is 10,000. 122, yes. So gross profit is 10,000. So I'll write 2 GP 10,000. Now in PL we have two columns. So you'll write by GP and you will divide in sales ratio. But sales ratio is not given. Sales of pre-post is not given separately. So we will use time ratio, which is equal because 6 months are there in pre and 6 months are there in post. So it will be 5,000 each in pre as well as in post. I hope this is clear, students. Okay. Now we'll close this account. At the end, I'll take 5,000 each. Okay. 5,000 and 5,000. Okay. Now closing the accounts, I'll write 2 partners capital. Okay. This is very important now. A, B, and C. As I told you, first let us find out the profit figure. Okay. First I'll take up the total of debit side. 3,625. The total is 3,625. I'll write it here. 3,625. This side total. 387. Okay. This total of debit side of PL. Okay. Now we'll come to know how much profit is there, isn't it? Okay. So 5,000 minus 3,625 will give me profit figure. I'll do it below PNL. 5,000 minus 3,625. Okay. Same way for post column also I'll do it. Profit is 1,125. Okay. So as I told you, in pre column, only A and C will share the profit. Okay. And in post column, all the 3 partners will share profit in 3:2:1 ratio. Have you understood, students? Okay. I'll show a working note here below. Okay. Okay. So pre profit will get only A and C. Okay. Only 2 partners will get. How much profit share they will get? A will get 1,375 into 4 by 5 because the old ratio was 4:1. So total shares were 5. Okay, how much he will get in free profit? See, free profit is 1,375. So he'll get 1,375 into 1 share out of 5. Okay, so let us see, calculate it. 1,375 into 4 by 5. 1,100 for A. D won't get anything because he was not there in pre column. How much C will get? We'll calculate 1,375 into he will get 1 share out of 5 shares. 275. Okay, 270. Now I hope this is clear. Okay. Now same way we'll do it for post profit. Okay, this was for free. I'll do it for post next to that only. Do it here. Post profits, not free. Now it will be post profits. Okay. How much is the post profit? 1125. 1125. Okay. And what is the new ratio? Now there will be B and C. Okay. All three partners will be there. We have to divide amongst three partners. And ratio is 3:2:1. So 3 plus 2, 5 plus 1, 6. So A will get how much? A will get 1125 into 3 shares out of 6. Okay. How much B will get? He's getting 2 shares. So in 1125, he'll get 2 shares out of 6. How much C will get? In 1125, that is post profit, he'll get only 1 share out of 6 shares. Okay, so let us calculate this amount. So it will be 1125 into 3/6 for A, then for B 1125 into 2/6 and last one will get 1/6. So 1125 into 1/6. Okay. We are not putting round figures, so I'll make it 563 for first one and 188 for last. Okay. I think let us check if total is same. 1126 it's happening, so I will reduce. I'll make it 187 only. 187 only. Or third partner. Always check this total. Yeah. Now total is 1125. So I'll give it to partners A and B and C. 563 for A, 375 for B, and 187 for C. Is this clear, students? Yes. So profit will be transferred to their capital account. So we'll write by pre-profit. So only transfer to A and C. How much? 1100 for A. It doesn't get anything in pre-profit. And C got 275. Okay. Now in case of post profits, to buy post profits, it is 563 for A, then 375 for B, and 187 for C. Is this clear, students? Now we'll close this account. We'll close this account. We'll take total. Okay, same way I'll copy it for the remaining 2 columns. Now I'll carry for the same total, or rather write on the debit side. Okay, now let us see if we have earned profit. I think so, we have profit. So we'll write to balance, transfer to balance sheet. Okay, so for A it will be 22,263 minus 1000 and minus 6000. Okay, same way for B and C. Clear? Now these capitals will be recorded in the liability side. Okay, so I'll write capital accounts. A, B, and C. Right? So I'll write their values. 15263, 1125, and 3362. Okay, now the total in the outer column. 19750. Let me check it. 1970. Correct. Now we have to see if our balance sheet is tallying. Okay. Take the total of liability side 3375. Let us take total of asset side. Wait, I think data amount is wrong. Let me correct it. 12,000 minus 12 million. Yeah. So let me take total of asset side. Yeah, it's tallied. Sum has tallied. Okay, students. The sum will be for 20 marks. I hope you understood this, all the calculations. Okay. If any doubts, please post it, or you can send me on the WhatsApp in our group. It is open. P&L appropriation account is not required. You are adjusting this P&L only. It's fine. Okay, no problem. Okay. For interest on capital, we may require, but need not have that. You can directly do it in this. Okay. Should I start with something new, or shall we take a break? Can stop this session now. Okay, we'll discuss on the group which chapter you want next. Okay. Acha, Shivani is asking to explain goodwill again. Okay, I'll show you goodwill again. Okay, pay attention. Goodwill is very important. Okay. So I'll read the adjustment. On 1st July, B was admitted, who has brought 5,000 for his capital, with the entry for which already passed. So we can see in capital account, or in trial balance rather, below capital heading, B's capital already recorded 5,000. Okay. So we can directly post in capital account by balance A, B, and C, all three partners' capitals. Okay. Next. And 12,000 as a share of goodwill for which entry is not yet passed. Okay, they may give you a sentence like raise goodwill to the extent of 12,000 or 15,000. Okay, what they'll say, raise goodwill to the extent of 15,000, 10,000, 20,000. Okay, the entry is very simple. Entry is very simple. What you'll do, write buy goodwill on the credit side. Very simple entry. What is the entry? Just write buy goodwill. And whatever amount of goodwill is raised, distribute or divide that between the old partners using their old ratio. Okay. In the sum, old ratio is given as 4:1 of A and C. Okay. So see, I have done the calculation. Okay. Goodwill raised is 12,000. So 12,000 into 4 by 5. Okay. The ratio is 4:1. So add 4 plus 1, 5. So that is the denominator, 4 by 5. Okay. The amount is 9,600. Give this to A, and 12,000 into 1 by 5, 2,400, give it to C. Okay. Although A has brought in the goodwill value, but it belongs to old partners for their hard work which they have done over the years. Okay. So this is the benefit passed on to the old partner. So even though B is bringing the goodwill, don't write in B's account. That will be a mistake. Okay. Divide that in old ratio amongst old partners. Okay, and write on the credit side one simple entry. Okay, buy goodwill, that's it. And if the question says write off the goodwill immediately, then immediately pass reverse entry on the opposite side. What you will do? To goodwill. What was the total value? 12,000. Okay, so divide that using new ratio among all the three partners. Always remember, when B brings in goodwill, divide that between two old partners in their old ratio. But when they say write off goodwill, then pass opposite entry in capital account, right, to goodwill. Okay, and divide the 12,000 amount or whatever amount is there in new ratio among new partners. Okay, the amount is 12,000 and their share is 3:2:1. So I have distributed the Goodwill. You can see at the right hand corner. I have made a working note. Right of Goodwill, how much? 12,000 into 3/6 for first partner, 12,000 into 2/6 and 1/6 for last partner. Directly write on the debit side amount 6, 4 and 2. That's it. Clear, students? Now, suppose they do not give you right of Goodwill, then only for one entry will come, credit side by Goodwill, 9,600 and 2,400. Okay, and total is 12,000. You show that on the asset side as Goodwill 12,000. Okay, and if they say Goodwill write-off, then this balance sheet part you need not even show. If they say raise Goodwill and write-off, this part you need not even show. Just one on the credit side and one entry on the debit side. On credit side, use old PSR and distribute among old partners. And on debit side, write-off entry, new PSR and amongst new partners. Is this clear, students? Okay. If you want, you can show this way in balance sheet also. अगर raise है तो सिर्फ first part आएगा, write off है तो less करके वो zero हो जाए. Clear? Any other entry you want me to explain again? You want interest on capital? Interest on capital again, very simple entry. You are giving something to partners. Okay, you are giving credit to them. Okay, so in partners capital account, always keep a line for interest on capital if adjustment is there. Okay, because always calculate interest on capital on the opening balance of partners capital account. Okay, whatever percentage is given. But when you are calculating for new partner, calculate only for the period for which he is there in this year. This partner was admitted on 1st July. So for first 6 months, he was not there. So while calculating interest on B's capital, do it only for 6 months. So 5,000 into 10% into 6/12. For remaining A and C, they will get full years. It is 10% of 10,000 and 10% of 2,500. Now record this on the debit side of P&L account, like to interest on capital. Okay. Then write A, B, C. Names of all the three partners. Okay. Now in partners capital account, C, interest on capital we have written for A 1,000. So this is for full year 10%. So we have to in P&L we have to divide that as 6 months, 6 months. So 500, 500. In case of B, 250 interest is paid to him, but it belongs only for post period. So don't write anything in pre-column. It will be in post column only. C is from the beginning. So 250 interest will be divided between pre and post equally. I hope this is clear. Any other doubt, students? Okay, I'll share the picture or photo of this sum on the group. I know it's a little blur. I'll share the sum. Okay, if you want, I'll share the sum of previous lecture also. I know it's very difficult to accommodate on one screen's question as well as solution, so I have to do it somehow. Okay, so I'll send this sum. Don't worry. Okay, so that's it for now. Okay, we'll discuss on the group other things. Okay, thank you. I'll stop the live stream.